morning, everybody. Pope Binary here, and today I'm going to go over the topic of how markets react to support and resistance. You know, if you haven't seen my other video, I show you how to identify support and resistance, but I haven't really covered the topic of the actual trading behind it, you know, how the markets generally react to support and resistance. So today I'm going to walk you through how you can identify when an incoming trade is happening and better navigate these support and resistance zones. So before we jump in, here's the quote of the day. A man may know what to do and lose money if he doesn't do it quickly enough. That's from Jesse Livermore. So here's how markets react. All right, everybody, to teach you guys today, what I did is I whipped out the good old handy dandy PowerPoint, and I'm basically going to teach you the patterns, then show you some examples of some trades I've literally taken over the past couple of days to show you, you know, that these patterns work, right? And so in general, if you guys get nothing out of this video while I've still got your attention, I want you to know the following. Double test of a support and resistance are the best time to trade them, right? So if we take this hypothetical situation, say a market reached a major support and resistance, it initially rebounds, it comes back to the support and resistance, and then you see another, you know, clear reversal pattern. This could be a candlestick pattern, this could be a indicator telling you, this could be a bullish engulfing candle, it could be a pin candle, it could be anything. If you see the market after it retests the same value, if you see the market break away and pull away from it, that is a strong signal, you know, that the market is going to switch directions. Double test, this is called a retest. These are the best types of trading. And in general, this is the same exact thing, but not really. Saying the same exact situation, the market breaks through a major support and resistance, wait for the market to come back, retest the value, and then if the market continues in its current direction, that is the strongest indication that the market, you know, is going to break away from the support and resistance. These are the two best situations to trade support and resistance. And if you guys get nothing else out of this video, use these two patterns. However, if you want to stick around, I'll teach you guys a little bit more about how to better trade support and resistance. And I honestly could go on to this for hours because there's so much to cover, but I'm just going to teach you guys the basics today. So trending versus ranging, right? The one thing I like about markets, and hear me out on this, and if you know this already, this is very basic, but markets at any given moment, 100% of the time, they are either trending or ranging. Trending is something that looks like on the left, right, higher highs are being established, higher lows are being established, right, it's going in a clear direction, and obviously the inverse is true for a bear market. Likewise, for a ranging market, or rather not likewise, the market is moving sideways, right? There's a clear support and resistance line that the market continues to respect over and over, right? And so that is a ranging market. And the big takeaway from this is markets react differently to support and resistance for each type of market, both trending and ranging, right? So the big thing, and I'll get into this later, you need to know is in trending markets, support and resistances are going to fail. Be careful trading support and resistances if the market is trending. And I'll tell you how you can best use this later. And likewise, in a ranging market, support and resistances are really respected, meaning they're generally not broken, right? Otherwise the market would be trending, right? So in a ranging market, support and resistance are highly respected, and you can get a lot of in the money, you know, high percentage win rate out of these type trades. And so what I'm going to do is I'm just going to cover the ranging markets, right? The ranging market is the one on the right here, right? In a ranging market, support and resistance lines are highly respected, like I said. And like the boundaries of a ranging market, generally these are not broken. And if they are broken, you can expect a very violent reaction, which is good for traders, right? It's really good for day traders and, in my case, binary options traders. This video, it's basic, but I'm a binary options trader, right? If you're interested in that, check out my channel, but this is just a video in general. Man, I left out a number here. There's actually 5 different types of reactions I want you to know. But in a ranging market, there are 5 general cases of reactions. The first is the market rises to a resistance point. Then you'll see a bearish engulfing candle or bullish engulfing candle. Obviously, it can be reversed, right? I guess that's what I meant when I put the number 1 down here. But if you see an engulfing candle at these values, then it's generally safe to say that the market is going to, you know, reverse and go back up to the upper boundary. The second big reaction is a pin candle. If you haven't seen my other video on pin candles, check it out. But in general, if you see a pin candle forming at a support or resistance in a ranging market, take the trade, because I can guarantee you right now, a greater than 70% of the time this is going to win. I've just seen it hundreds of times. It's going to work. The third type of reaction, you're going to see lots of long wicked candles without any real bodies bouncing off support and resistance lines. And that is, there's a pattern called a walking man pattern that I've been testing, and it works out really well. But essentially, if you just see long wicks, the first time you get a candle that says, okay, we're switching directions, it's safe to take that candle and say the market will continue to rise, right? So that's the third reaction. And then the fourth reaction is you're just going to see two candles of the exact same size appear. And if you combine those, right, that's just a big almost pin candle, big doji that forms, right? And then the market's going to fall. I hope you guys followed along there. But basically, if you see two candles of the exact same size, you can generally assume the market is just going to continue to plummet, right? And so the next big topic, right, is how to identify when ranges are broken. Right? And like I said back when the double entries, if you see the market break outside a range, if you see the market come back to the in this case a resistance line that the market is respecting, you can expect that the market is either A, just going to crash back down into the market, right, or back down into the range, or the market is going to bounce off and pivot upwards, like we see in this example, right? So whenever you see the market, break outside and then there's just lots of bizarre things happening, that's when ranges fail. And this is part two of when ranges fail here. If you see the market, come up to the resistance, come back down, but instead of going back down all the way down here to the lower range boundary, it comes back up very suddenly, and then you just see it flatline in real time this would look like a bunch of doji candles forming. That means there's lots of indecision in the market, and generally the market is going to break outside the range, right? And you'll see this over and over. Just go look at your own charts. I guarantee you right now, if you open your own charts, you'll see these patterns right now if you go open them, right? And so the last big thing I want you guys to let you know, obviously, during news, ranges are going to fail. Because what ranges mean, think about the psychology behind the traders. Traders, when they're in ranges, nobody wants to break the boundaries. They're either fearful or greedy. You know what I mean? They want the market to stay in this zone, right? And so news is just an excuse for the so-called boring market to fail, right? People want a trend to break out because that's where big money is at, right? So whenever news come out, whether it's significant or not, whether the news actually has any impact on the markets, people will generally break outside of a range because they want to see a trend form, right? And so that's basically a range. And now I'm going to go into the second big part, which is trending markets, right? Trending markets, and like I said earlier, in trending markets, weaker support and resistances are going to fail. If every support and resistance was respected equally, the market wouldn't move, right? In order for a market to trend, it's going to have to break support and resistances. And so, like I said in this third bullet point here, be careful trading against the trend in these types of markets. If you're trading support and resistance in a trending market, the best advice I can give to you is just wait for an overbought or oversold market, or wait for a double top or double bottom. Those are the only times when it's safe to trade against the trend at a support and resistance. Because a lot of the times, if a market is trending and it hits a support and resistance, like, for example, say hypothetically we had a bull market, the bull market was rising, it hit a resistance zone, more than likely, even if there is an initial reaction where the market pulls away from the resistance line, the market is just going to spike upwards because people don't want to have to so-called deal with the support and resistance. And so what I have here is I've got the cleanest example of how to trade support and resistance in a trending market. So say we had a hypothetical bull market, hit a resistance, bounced off, then the market shattered through the resistance. Then you wait for another pullback to come back down to the same exact value. I wish I could circle these, but you see how these are the same exact value. Wait here for a bullish engulfing candle or bullish pin candle or any sort of reversal pattern, and then say the market will continue to rise. See how these two are the exact same value? That is the cleanest example of how to trade support and resistance in a trending market. And like I said earlier at the beginning of this slide, double tops and double bottoms. If the market fails to break a major resistance or support line twice, that is a strong indication that the market is going to go into either an extended pullback or a full-blown reversal, right? Although full-blown reversals are really hard to catch. Those only happen about 40% of the time, but you can definitely be guaranteed that the market will hit a nice period of reversals. All right, guys. So here I've got some examples I want to show you. I put all these examples in my trading group. So if you're in my trading group, sorry, but if you're wanting to join that, feel free to check this out. But here are the examples explained. So last night I saw that on the 1-minute charts on GBP here, the market absolutely plummeted back to a major resistance zone. And this line, I don't know if you can tell, this is an orange line. On my charts, if I put it in an orange line, that means this is a daily high, right? Meaning this is a daily support and resistance, meaning this is an extremely important value. So the market came all the way down to this value. We can see in this circle portion, like I said, the market initially pulled back, it came back down, it retested, and then a huge engulfing bullish candle happened. And then, I kid you not, this is on the 1-minute charts for the next hour, for the next 60 candles, the market did not touch the close of this engulfing candle, meaning the market just continued to rise, right? And what I'm going to do now is I'm actually going to jump back and show you that is the exact same pattern I just taught y'all earlier. Let me see if I can find it. It's right here. In general, if you see a market come back down to a resistance and you see a double bottom form, bet up, right? That is the exact same pattern that I just showed y'all, right? And so that's one example. Okay, here's another trade. This one happened today. This is a trade that I took today, and I put this in my trading group as well. The market, I saw the market, we're in a range. This is a clear range. If you guys don't know what a range looks like, see how the market is just moving sideways here? We're in a range. The market, and I could see, there's a clear resistance or a clear support line down here. The market had been plummeting down for the longest time, so I waited for it to get to this lower resistance, and then a pin candle formed for the first time at this major resistance. Place a call. Right? This is such a strong reversal. And then, of course, the market absolutely just rose in the next 5 minutes. That was a really nice out of the money contract win for me there. I took an out of the money there. But I haven't really highlighted this, but I want you guys to know, notice how there are so many reactions to these range boundaries. We can see right here there's a strong rejection pin candle. The market plummeted away. We can see over here, the market hit the resistance and then it fell away. Then likewise right here, there was an engulfing candle. The market just absolutely came down to the lower boundary, right? The ranges are really good for trading in my experience, especially for binary options. All right, here's another example. Okay, so this is an example of a trending market. So I want you guys to look on the right here. We can see there had been a large bullish rise, pull back after it hit a resistance line. Then the market came all the way back up. This box indicates, we were stuck in a trading range at the resistance zone, and then there was a breakout. And then after this breakout happened, I was looking for the next major resistance line, which was over here on the left. We can see, the market pivoted off this value. So I put in a line here. I waited for the market to rise to that exact same value, and then an instant bounce occurred off of that pivot zone. And so then I placed a put or a call and or a short or whatever the terminology you want to say. Basically, I said the market was going to fall, and it did, right? So that's another example. Here's another example for you guys. We can see the market, it was ranging for the longest time. The market broke outside the range. It rose back up to the range. Then a beautiful pin candle formed, bouncing off the resistance line, and then the market just fell away, right? That is such a clean example. And the same exact thing happened like 10 minutes later, right? We can see that another pin candle formed, bouncing off the resistance line, and then the market fell away. That was a double entry, right? And so that is a fantastic trade in my experience. Okay, so here's one more example for you guys of support and resistance trading. We can see, the market over here. There was a clear support line established, or rather a resistance line. The market rose all the way back up to it. Pin candle followed by bearish confirmation candle. Market fell away. These are two trades I took today, by the way. I was extremely happy with how these turned out. And likewise, after this, a new pivot had been established. The market rose back up to this pivot, bearish candle, market fell away, right? So this is support and resistance trading. If you found anything helpful in this video, please like and subscribe. If you have any questions, feel free to email me at popebinary@gmail.com. I'll answer them toll free. You know, I'm not looking to, you don't have to pay me for my answers. I'd be happy to help you because I'm in this to teach. So if you found anything helpful, please like and subscribe, and I'll catch y'all in the next one.